everyone. Welcome to Stock Market Today. It's Alyssa Corum and Justin Nielsen here with a look at the action in today's market, where we did come back from intraday levels, but still losses across the board today, Justin.
Yeah, it certainly wasn't able to follow up on yesterday's strength, so this is still a market that is on the ropes a little bit. But we'll go ahead and take a look at some of the stocks that are setting up. Vertex Pharmaceuticals in healthcare, as well as United Healthcare, ticker symbol UNH. And we'll also discuss a little bit about this Amazon.com stock split, 20 for 1. That could be a big deal.
Yes, we will give the IBD take on that. But first, let's take a look at those major indexes. So the NASDAQ closing the day down almost 1%, the sharpest loss today. We also had the S&P 500 down about 0.4%. Same for the Russell 2000, and the Dow down a little over 0.3%. So again, we came back from our lowest levels intraday after a morning gap down. That got worse, came back a little bit, but when you look at the chart, it doesn't look too impressive right now.
Right, and this is the thing. A lot of people get excited about. I mean, that was a pretty big day yesterday, right? The Nasdaq up 3.5% or more, and it's just one day. And I think the headline Ed had yesterday kind of said it all. It's just one day, so you really have to have a follow up on that move. If you just look at the chart here, I mean, everything, all the moving average lines are looking poor. They're all down. The 200-day, that black line, that's your long-term moving average line. That's rolling over, and all your shorter ones are solidly in a downtrend. So again, that just means we're going to have to get a lot more evidence of strength before thinking that this market can turn itself around. You know, we still all have all these headwinds, whether it's the Russia-Ukraine situation, inflation numbers, the Fed, what they're going to do. There's a lot of overhang here. That doesn't mean that the market can't overcome it, but right now, what the chart action is showing us is that it's not ready yet.
Yeah, definitely not ready yet. We could just take a quick look at the intraday chart. You see the powerful gap up in Wednesday's session and strength throughout the day, but a gap lower today. Tried a couple waves of coming back, finally did make up a little bit of ground, but again, the NASDAQ down about 1% by the end of the session. And we could take a look at the go ahead.
It's nice that it got back up to, the kind of started to fill in the gap, but and above the open, but yeah, it just wasn't enough to really kind of be convincing.
And the S&P 500 here looking similar, but its 50-day is about to cross below the 200-day, so a death cross waiting to happen there. We also want to take a look at the Dow, and which recently had a death cross of its own. And small caps, look at the Russell 2000 here, still range bound in this choppy area right around its 21-day line, but not a great picture for small caps either, Justin.
Yeah, it's not a great picture for any of the indexes, really. And that 21-day moving average line, I mean, at least the Russell 2000 has been able to get above it a couple times, but it hasn't been able to stay above it, as have most of the indexes. And, regarding the death cross, a lot of people kind of put a lot of weight on that 50-day moving below the 200-day, but the way I look at it is that's a really late signal. So
it is.
Hopefully you had already done the majority of your selling at this point, because if you were waiting for that signal, and a lot of times it can happen right around the market turn. So it's much better to be using those distribution days, the evidence from your individual stocks, and all of that information, as opposed to the death cross, which does tend to be very late, as does the golden cross on the upside.
So true, Justin. Yeah, we want to be taking a look at that daily price and volume action as our clues and the underlying health of leading stocks in the market. Let's also take a look at the 10-year Treasury yield after a trip lower, a couple days of some pretty big spikes.
Yeah, so I mean, this is certainly one of the things that I think a lot of investors are going to be keeping their eyes on. Certainly, there was a lot of bond buying. When the bond prices rise, keep in mind that is what is going to make the yield drop, and what we're looking at here is the yield. So, certainly the situation in Russia, Ukraine, that was potentially causing a lot of bond buying. That's a safe haven that people go to. Not that anything has been concluded there, but you are seeing that there is a lot more of that yield increase back to those highs, back to that 2% level. So that's something to watch and keep
Mhm.
your eye on, because that does specifically affect growth stocks quite a bit.
Yes. Yes, it does. Okay, well, speaking of growth stocks, let's go ahead and take a look at some charts here. We have VRTX, Vertex Pharmaceuticals, a nice strong uptrend followed by a pullback. It's been trying to gain some momentum in recent sessions, but is volume a concern to you here, Justin?
Yes and no. If I were looking at this and I'm like, hey, I want to buy this off the 50-day moving average line bounce, the lack of volume there bothers me. But if you just kind of take that step back and look at this as a flat base, a lot of times you will see that volume trickle down to basically nothing as a flat base gets formed. So I like the formation right here, the flat base, the fact that it's able to stay flat. If you go ahead and hover over the pattern recognition, it tells you exactly what that depth is. It's a 12% depth. When you're seeing a lot of these stocks come down significantly, coming down and correcting 12% is not too bad. And the fact that there's no volume behind it is even better.
Mhm.
You had that that first week of volume on the downside to start the base, but other than that, you really haven't had heavy volume. And you also notice that we've got that blue dot there. What does that mean? Well, the relative strength line is already at new highs, even though this stock is at a base. And you might look at that, the new highs on the relative strength line from way before, and say, well, gosh, this is still well below those levels, but we're looking at 52-week highs here.
Right.
The older stuff we're not looking at as relevant. So Vertex has a lot of elements here that are looking strong.
That it does. So a potential early entry taking shape here, even though our preference, as you mentioned, I feel like that as well would be to see that strong bounce off of the 50-day line. But it does look like constructive action. And for investors looking to get a piece of this when it's close to the 50-day line or 10-week, it's just about 3% above that level at this time.
Right. And the contrast here to the indexes that we just looked at, just look at what the moving average lines are doing here. You have that 40-week moving average line, that long-term black line, that's starting, it was going down and it flattened out and is now starting to turn up. That 50-day line, the 10-week line, is already in an uptrend. So it's just a very different picture that you're seeing here in terms of strength than what we saw in the indexes. So that's also a big positive.
Yes, that's exactly right. Okay, let's take a look at UNH, a different medical sector name here in the managed care group, working on a double bottom base, a gain of about 1.2% for the day. And it also boasts a strong relative strength line.
Yeah, and you can see how the 500 level seems to be an area of resistance here. It kind of hit its head on that, got above it a little bit at the 509 before the end of the year last year, and immediately came down, couldn't hold it, came up to that level again. That's the middle of the W in the double bottom, and then one more time, try to come up to it, and now it's kind of forming, I don't know, you could even call it maybe a little handle here. So really, I think this 500 level is going to be important for United Health, and if it can get above that, there's the possibility of quite a run here. Now, this is not necessarily the biggest moving stock. It's not like it typically has huge moves. If you go ahead and go to the weekly chart, but you can see that there is this steady kind of incline that it's had. So that relative strength line shows long term. It's not that it really outperforms the S&P 500 in a big way, but you have seen that relative strength line kind of take an uptick here, and especially with the S&P 500 not doing so well, this one doing
Mhm.
well, you're certainly seeing the potential for outperformance here. So it might not be huge, but if it's better than the S&P 500, that might be worth putting on your radar.
Right. And because it is a steady name, that seems beneficial in this environment that we're seeing so much volatility, big up days, even bigger down days,
Right.
huge swings intraday that if you want to put a little money to work, you can maybe sleep a little better at night if it's in something like a UNH.
Yeah, and certainly just to kind of put a exclamation point on your point, Allie, another way that
Point,
you can
point.
sleep better at night is just being in cash, for
Yeah.
an alarm day.
So true. Yeah, I feel like I'm getting some pretty good sleep lately.
Right.
We've got your cup with handle, double bottom. Double bottom with handle isn't quite in the textbook, but I feel like we like handles on double bottoms,
Yeah, you know
actually.
what? There are plenty of them out there. They're not always identified, but if you go through the model books, or even if you look at Bill O'Neill's book, How to Make Money in Stocks, and you look at that first chapter in the 100 charts right there in the first chapter, you'll see some double bottoms with handles there. But one of the things that's kind of interesting about this double bottom, we're typically looking at them as being very volatile. But if you go ahead and hover over the pattern recognition on this one, let's look at the depth. 12%. This
Looks like
actually kind of
Vertex. Yeah.
qualifies for a flat base. It just hasn't really
Mhm.
come off that much.
Yeah. All right. We'll keep it on our watch list. Let's also take a look at Amazon, which I don't think is on our watch list right now, Justin, even though it did have, if you just isolate today, gain of over 5%, some volume behind the move. Uh, Exciting headline for this
Right.
20-for-1 stock split, but it seems like Amazon is in such a different position than Nvidia when it announced its stock split, and then the year before that when Apple and Tesla announced their stock splits. Not only with the way that their charts looked, but also just the market backdrop as well. But that news on its own isn't a reason to get excited about getting into a stock.
That's basically it. Yep. I mean, really, the headline, I think a lot of people get excited about it, oh, a split. A lot of people get turned off by the idea of buying a stock that's trading at $3,000 because, oh, I can only buy one share, or maybe I can only buy fractional shares. The truth is, look, a 20-for-1 split, does it matter overall? Not really. I mean, logically, it shouldn't. It does it matter if you have a $20 bill or if you have 20 singles? No, it's still $20. It doesn't do anything to the value. Now, it does psychologically matter for a
Yeah.
lot of investors, because, hey, I can buy more shares and that makes some people feel a little bit better. It certainly does matter for the option market because when you're dealing with, 100 shares
Yes.
in a contract, hey, look, that's going to price a lot of people out of the options market playing Amazon,
So true.
because they just can't do it. But there is this other consideration. Does this open it up for maybe being included in the Dow Jones Industrial Average? Maybe. It's certainly tough for a $3,000 stock to be in the Dow Jones Industrial Average since that is a price-weighted average, unlike the S&P 500 and NASDAQ Composite, which are both market cap weighted. So that means when it's price-weighted, the higher the price, the more influence it has. And
Mhm.
Amazon at 3,000 could really just, kind of dominate the index, and they don't want that. So this does open the doors for that. But as you pointed out at the outset, look at the chart. What is it? What's going on in the chart right now? I don't care that we have this headline. I have
Yeah.
a 200-day moving average line that's in a downtrend. I've got a 50-day moving average line in a downtrend. All the shorter term moving average lines in a downtrend. It could hold here, and that's great, but I need more evidence, just like with the
Yes.
indexes, before I get involved in a stock like this. A nice headline and a 20-for-1 split, it's not enough to
Mhm.
entice me.
Exactly. Yeah. Cover up the ticker, look at this weekly chart. Is this something that you should be getting involved with? We would say no. It has a lot to prove itself first, as you mentioned, Justin.
Yeah, not right now. That doesn't mean, I mean, hey, look, I'm not going to
Yeah.
bet against
Who knows?
Amazon. It's
Maybe you
it's a
can
great
get
company.
some momentum from here.
Right.
Maybe you can get some momentum. We'll have to see. All right. Thanks so much, everyone, for tuning in. Justin, as always, for the spot on analysis. And if you haven't checked out the podcast yet, which dropped today, you should definitely do so. Justin, you want to just a super quick tease of what people can expect on this week's podcast at
Well, yeah,
investors.com/podcast.
we talked with Anne-Marie Band. She's from the tradingbook.com, CEO there, and she just really knows how to tell a story about a chart, and look at that support and resistance, get in the mindset of what she calls the competition, and I think it's really good for people that are a little bit new to charts to kind of get that narrative of what's happening. What is that pull, that tug of war that's going on between the buyers and sellers? So it's always a pleasure talking to her.
Love it.
Definitely suggest that people check it out. She's a great
Yes.
educator, and she's got this neuroscience background that she comes from that really, I think, adds an extra element to her talking.
Yeah. It's so true. All right. Yes. Investors.com/podcast. Check it out. And coming up tomorrow morning on IBD Live, we have Kathy Donnelly, co-author of The Life Cycle Trade, returning to the show. And then a couple hours after we wrap, you will catch Dave Chung and I on Barron's Live, barrons.com/live for the details on that. We're going to talk about how to find new market leadership and not get stuck on the leaders of the past. We'll see you then, and we'll see you right back here tomorrow afternoon.